When you took a forbearance and they put it at the end of your mortgage, well, guess what? When you're refinancing, you're ending that mortgage. Time to pay up. So don't forget, because I don't want anybody to have any surprises. Hi everybody, welcome back to the channel. Today we're going to talk about mortgage forbearance. It is a big, bad F word. Stay tuned to the end of this video to learn more about mortgage forbearance and why you should not do it. If you can avoid it, please don't do it. Welcome back to your one-stop shop for anything and everything mortgage education. Please do me a huge favor, subscribe to the channel. That would be so amazing. If you like the video, hit the like button. I'd really appreciate it. And if you find value in these videos, not only should you subscribe, but please share them with your friends. I post new videos every Tuesday and Saturday. My name is Stephanie Weeks, and I have helped thousands of customers with their mortgage financing. And my goal now is to help you, any and every consumer that I can, have mortgage peace. I discuss in these videos anything and everything mortgage education, and I bring to the table my 16 years of mortgage loan officer experience to do so. Mortgage forbearance. What is it? Why is it bad? And why you should not do it unless you absolutely have no other choice. You know, I want to kind of give you a quick disclaimer first. Let me say to anyone out there listening to this, if forbearance is something that you absolutely need and there's nothing that you can do and you have to have reprieve from making your payments during difficult times, then you need to do that. You need to protect yourself. You need to do what's best for you and or your family. And it just is what it is. You know, sometimes life throws us curveballs that we can't control. Okay, so disclaimer. If you absolutely must take advantage of a forbearance, you just have to do so and cut yourself some slack. You know, times will get better. You'll make it through it. And it just is what it is. So it's okay. Peace of mind means a lot. Now I'm going to go ahead and dive into forbearance and the things I wanted to cover about that. So why do I say that it's an F word? It's an F word which is associated with bad words, right? So what does it mean? Let's start there. What it means is that you need some type of reprieve or some type of break because you are going through some type of hardship that has caused you to not be able to make your mortgage payment. When you agree to a forbearance, you are saying, I cannot make my mortgage payment and I need a break. That is what that means. So what happens when you take a forbearance? What does that mean? Where does the payment go, right? So we discussed what it means technically, but where does the payment go? So what happens is that each forbearance is different. They're structured differently. So with some mortgage companies, you're saying I need a 3-month break from paying my mortgage because of a hardship. So at the 4th month, I'm going to go ahead and pay you all 3 months at once. And I'm going to pause on that because I want you to think about that. In some forbearance agreements, you were saying that I need a forbearance, I need a break, in this example, 3 months, and that on the 4th month, I will come back to you, Mr. Mortgage Company, and I will pay all 3 payments at once. Wow. Some people don't realize they're committing to this. And I don't know about you, but I feel like if I can't make a payment for 3 months, how the heck am I supposed to make 3 months payments at one time? It just doesn't make a lot of sense to me when they offer those types of agreements. And I just really want you to read everything you're signing, know what you're getting into and agreeing to, because that's one example of a mortgage forbearance agreement. Let's talk about another example. The next example is that they're going to put the payments at the end of the loan. And guess what? People are surprised by even what that means. So let me give you an example. Let's say you took a forbearance. Let's say that you put 3 months at the back of the loan. Let's say that then you're trying to refinance. Keep in mind, you might not be able to since you had a forbearance. Very possible that you cannot refinance because you have a forbearance. But let's say that something works out and you're able to do so. And you think that you owe $150,000 on your mortgage, right? That's what you see on your statement. Well, guess what? When that payoff comes in, it's $150,000 on the mortgage plus the 3 months payments you missed. So now whatever numbers that you're working with your loan officer are probably incorrect. that is going to suck. So keep that in mind. That's another example of what you're agreeing to with a forbearance. Where does the payment go? Example 1, possibly you're making 3 payments at once on the 4th month. And example number 2 is possibly that you're putting it at the end of the loan, which sounds amazing if you keep the loan forever. But when you go to pay it off, you're going to owe more than you're thinking that you do. The next thing that I want to talk about, because I get this question a lot, will taking a forbearance mess up your credit? Politically correct answer is it's not supposed to. So a lot of things these days are electronic and computer generated and computer automated. So what has happened in the past that I've seen, and I haven't seen it so much in this year, 2020 with COVID, so hopefully they fixed it, but what I've seen in the past is when people took forbearances years and years and years ago, they actually, in one part of their system said, yes, this person does not owe their payment, they're not late, whatever. But then in another part of the system, it started reporting to the credit bureau that the mortgage is not paid. It's 30 days, 60 days, 90 days late, which is detrimental to your credit. So it's not supposed to negatively affect your credit, but you always need to assume the worst, watch everything, monitor your credit, and make sure that if you took a forbearance and it's not supposed to affect your credit, that it's actually not. That would be one tip. And the second tip is if you do anything, forbearance is this example, you get that in writing, and you read every line, and you read every number, and you read every detail on that page before you sign it and agree to something you don't even realize that you're agreeing to. And that way, let's say that agreement says you're in forbearance for 3 months. That agreement says this will not negatively impact your credit score. Beautiful. You both signed it. You've got your copies. Next thing you know, an error has happened. It's showing on the credit. Not only can you dispute with the mortgage company to fix it, but you have something in writing to also take to the credit bureau in case, heaven forbid, you need to go that route as well. Next, can a forbearance mess up or mess with or affect your refinance approval? And the answer is absolutely, absolutely, absolutely. A few things. I'm going to throw a couple of examples and get your mind kind of thinking. So when you're refinancing, the lender is looking at you and your profile and your credit, your capacity, your collateral, okay? And so those are 3 of the C's of mortgages. There are actually 4. You can figure out the 4th by downloading the checklist I'm putting here for you today. But so those couple things, right? Those 3 things. So your credit is it good? Is it on time? How's your pay history? Well, one of the things we look at when you're refinancing is what's the date last active on your credit for your mortgage? Because that usually indicates the last payment that you made. So if a loan officer is looking at your credit, we're in July. Your credit report says last active May, right? That's a huge indicator that you haven't made a payment. So that's going to lead to other investigation, asking for things like most up-to-date mortgage statement, which is then going to show if there's money that you haven't paid because of the forbearance. And that's going to cause an issue because we're saying or trying to prove that you have the capacity to pay that new mortgage. And if you didn't have the capacity to pay the old mortgage within the last 12 months, well, you're kind of telling on yourself right there. I don't have the capacity, and that's going to make it hard to get a refinance, and in some cases make it absolutely impossible to get a refinance. So it can absolutely affect that refinance. The other way that it can affect your refinance is, remember what I said previously, is that the balance. So let's say that you're banking on a new loan amount of $156, okay, to pay off a loan of $150. And that's to roll in closing costs, prepaid, set up your new escrow, all that stuff, right? Well, the second that payoff comes in and you owe 153 and not 150, your loan to value just changed. Now you might need $3,000 to close that you weren't expecting. Why? Because the payoff came in higher because when you took a forbearance and they put it at the end of your mortgage, well, guess what? When you're refinancing, you're ending that mortgage. Time to pay up. So don't forget, because I don't want anybody to have any surprises. I hope you're having a wonderful time talking about mortgage forbearance with me. I know it's not a super exciting topic, but you know what I learned this week? I always say that knowledge is power. And I actually had somebody tell me yesterday, and I was like, wow, I'm totally taking that saying. It makes so much more sense. So knowledge is power, but actually what's more powerful? Applied knowledge. Applied knowledge is power. So I hope these videos are helping you to be empowered, apply your knowledge, and make sure that you're making the best decision when it comes to anything and everything mortgage. So let's dive into my last topic for today, having to do with forbearance. And that is taking a forbearance. Can that affect if you're looking to pre-approve for a new home? And the answer is absolutely yes, because just like we talked about with the refinance, we as lenders are looking at your credit and your capacity to pay. So if you want to get approved for a new home in the next 12 months and you have taken advantage of not a foreclosure, oh my gosh, no, a forbearance, then we're going to be able to see that. There are some things that are going to let us kind of give us trigger clues that you have. We're going to find things that might be on your monthly mortgage statement you're going to produce, might find things on the credit report, the status history on the credit report, the status updates on the credit report, the date last active on the credit report, all of those kind of things, right? If we're analyzing bank statements and such, or we might need a verified 12 months payments on the mortgage, which sometimes if it's not reporting right and we can't get the credit updated, you need canceled checks. It's rare, but it could happen. So it's probably going to be found that you chose to have a forbearance. So again, when you're looking to finance a home, we are looking at, do you have the capacity to pay? And with lending, we look at a lot of things. Okay, so this is not super specific here, but generally we're looking real close at the last 12 months and we're looking pretty darn close at the last 24 when it comes to payment histories. And so if you've said in the last 12 months, oh, I don't have the capacity to pay my mortgage, I need to take a forbearance. Well, that's not a clean, good 12-month pay history. And it can absolutely affect the loan program that you can do. It might affect the approval altogether. It might end up costing you money, and additional money, unexpected, if you can't go the route that you thought you were going to go with your mortgage pre-approval. So it can affect you pre-approving for a new mortgage as well. So please keep that in mind. Remember, like I said, life happens. Cut yourself slack. If you have to do it, you do it. You take care of yourself. You do what you need to do. But applied knowledge is power, so don't forget. Today's free download is going to be the 4 C's of mortgage. Check this download out. It's going to make more sense as to why we're kind of talking about one of the C's when we talk about forbearance. So I really hope this checklist helps. I'm going to drop the link below the video. If you feel more knowledgeable and you know about forbearance and if it's going to be right for you or not, please drop me a comment below. Say forbearance, say yes, say definitely, say for sure. Any of those things. I'd love to hear your feedback. Guys, girls, gals, in-betweens, if you guys liked this video, please like it, share it, subscribe to the channel. Don't forget to hit the bell to be notified. Check out other videos I'm going to drop links to here. Thanks again.